Director Watt, welcome back to the committee, and
Thank you.
Congratulations on your confirmation. As you know, the Consumer Financial Protection Bureau has finalized its ability to repay qualified mortgage rule, and the purpose of that rule is ostensibly to encourage safe and sound mortgage loans. But a recent survey of mortgage lenders showed that about 2/3 of respondents would restrict lending directly because of the qualified mortgage rule as defined by the regulators under Dodd-Frank. And about 80% of those respondents expected the new regulations to measurably reduce credit availability. Now, obviously, given your agency's, FHFA's, recent moves, recent policy changes, you appear to share the concern about credit availability and access to affordable mortgage credit. The changes to guarantee fees, the guidelines allowing GSEs to buy loans with ultra-low 3% down payments, and all of this appears to conflict with the Bureau's qualified mortgage rule. So my question is FHFA pursuing a policy of encouraging mortgage lenders to originate non-QM loans that the Bureau would deem risky?
No, we are not. We're not without prudent compensating factors to take whatever that increased risk might be into account.
Well, wouldn't it make sense that a borrower that can only afford 3% down is likely to run into the debt-to-income ratio limitations imposed by the QM rule?
Yes.
Okay, so I guess again, I'm just curious to understand how the American public is to interpret what the federal government is doing, sending mixed signals of encouraging more credit availability on the one hand, your policy changes versus what the Bureau appears to be doing, which is tightening or restricting access to mortgage credit.
I think a judgment has been made that because Fannie and Freddie are under conservatorship during the period that they're in conservatorship, we could make those judgments without being subject to the qualified mortgage rules for a period of time. Now,
if I may, I
don't know that will sustain itself forever, but that's where we are at this moment.
Director, I've introduced a legislation called the Portfolio Lending and Mortgage Access Act. I'm going to be reintroducing that legislation. It's got some bipartisan interest in it. It's motivated by the same concern that you have about access to mortgage credit for responsible borrowers. And the idea would be to modify the QM rule to allow lenders to retain the risk, which was a primary motivating policy in the Dodd-Frank law, retain the risk, portfolio those loans to get the same safe harbor that other QM loans would get. And my question is, wouldn't that be a more sensible approach to dealing with these 3% loans so that the risk is on the shareholders of the bank and not on the taxpayer?
Well, I think that's a judgment for Congress to make. It wouldn't be a judgment for me to make. If you've introduced the legislation, then I'm sure Congress will evaluate it.
Well, thank you. Let me just quickly follow up on some of the questions that Congressman Duffy was asking you about the Housing Trust Fund. With roughly $3.3 trillion in assets and $9.5 billion in capital, Fannie Mae is currently leveraged at 341 to 1 and features a leverage capital ratio of 0.29%. Freddie Mac has roughly $2 trillion in assets and has a leverage capital ratio of 0.64%. The typical bank, I understand, to be leveraged about 10 to 1. So the current amount of leverage at Fannie and Freddie is far, far greater than the typical financial institution. I heard your testimony to be earlier that you believe that Fannie and Freddie are adequately capitalized and you're just following the statute. Is that right? Given those capital ratios, is that true?
I don't think I expressed any opinion about the adequacy of the capital. What I said was that we are operating under a preferred stock purchase agreement that has basically taken capital out of the equation during the period of the conservatorship.
Well, my time has expired, but I would suggest that if they are adequately capitalized, I would wonder why they're still in conservatorship.
The gentleman's time has expired.